great being with you on Budget 2016. Time is now. Modi government's third budget is a make or break moment for every stakeholder in the Indian economy, coming at a time of heightened global boom accentuated by a domestic economy that is showing really no big signs of revival. Maintaining the fiscal deficit, generating jobs, reviving the stressed rural economy are just perhaps some of the big challenges before Finance Minister Jaitley, especially at a time when his liabilities are rather high and revenue is under constraint. It really is a budget like never before, and so we at ET Now are covering it like no one ever has. Unparalleled preparation has gone into bringing you the most unprecedented budget coverage, cutting-edge technology to keep you ahead at every moment of the day, not just today, but even tomorrow. It is indeed my pleasure to be joined by my colleagues, Chief Editor Financial Markets, Nikunj Dalmia, with Aisha Faridi at the News Center in Mumbai, and Neeraj Shah on another unprecedented in Indian television, ET Now's Budget Wall. Good evening, everyone, and Nikunj and Aisha, it's over to you. What is it that markets are expecting of Mr. Jaitley come tomorrow?
Well, Supriya, all I can tell you is there is very little hope that the market is going into this big event come tomorrow, Budget 2016. And Nikunj, you'd have to agree with me on this one. More fear this time than hope, isn't it?
Well, historically, budget day is always considered to be an emotional day. The budget adjustment only lasts for a week, at max 15 days. But this time around, there's nervousness, there is anxiety, there is curiosity, there is a lot of fear. And I have never seen pre-budget expectations so low in a really, really long time.
Oh, yeah. In fact, Supriya, we out here in Mumbai compiled a poll as well of market experts to try and gauge really what the market mood is ahead of this big event. And let me start off with the first question. The biggest market fear, of course, is will the government change the duration for the long-term capital gains tax? Well, fortunately, 72% are saying no, 10% are saying yes, and 18% say that, well, they can't comment, they can't say anything about what the finance minister is really going to do. We also asked another question. Now, budget is a typical day when you see huge and wild swings in the market. So we asked the question whether or not we will see an over 500-point Nifty fall if it were to be the case that the long-term capital gains tax is tweaked. And no surprises for this one, Supriya. 53% of the respondents said that yes, the market is going to see a wild gyration of 500 points in the Nifty alone. 35% said no, and 12% stick with that they can't guess. The other question that we asked our market respondents was, will the government relax the fiscal deficit target? Because remember, this becomes extremely imperative, is extremely a watched target from an FI perspective. So 37% said yes, 41% said no, and 22% said they can't say. Nikunj, what else were the market participants quizzed about?
The best time to fix any systematic problem is when there is crisis. And right now there is serious crisis in the entire banking system. So we also asked a question that PSU banks recap or recapitalization allocation, will it be above 25,000 crore? And guess what? The answer is 100% yes. So markets are betting on a commitment from government to recapitalize PSU banks, and that number definitely will be above 25,000 crore. Disinvestment target of over 35,000 crore, less than last year. Well, 59% of market participants said yes, 14% said no, and 27% after what happened to FY16 numbers, they're saying can't say. Well, Nifty, ultimately it's all about benchmark indices and how much volatility benchmark indices can digest and exhibit that day. Will Nifty cross or close above 7,200 on the budget day? Now this is very important. 73% of the market participants we polled in, they said no, only 27% said yes. So uptick from these levels on the budget day, I think that's a minority view.
Well, Nikunj, all I can say is not just Dalal Street out here in Mumbai, but the world is watching with bated breath and high stakes the budget from the finance minister, his third budget indeed. So Tanveer Gill, my colleague, joins us all the way from Singapore with perspectives from foreign investors. Tanveer, hi, evening. What are the FIIs looking for from this budget?
Well, thanks very much for that, Nikunj and Aisha. Yes, I have with me two very special investors who need no introduction. They've been investing in the Indian market for over 2 decades. Sameer Arora as well as Akash Prakash are right here with me from Singapore, and behind this very beautiful backdrop. Good morning to both of you.
Morning.
Thanks very much for taking out the time. It's a great view. And I just thought that since this is a great view, is the view on India as well as great stepping into the budget?
Well, in recent days it has not been, but in the long term we have seen in the last 20 years that these things do work out in the end.
What do you think?
No, I agree with Samir. I think it's, we've been positive for some time. The last 3 months have been disappointing, to put it mildly, from a market perspective. But let's see, hopefully they get a chance to turn things around.
What are you expecting from the budget, specifically in terms of what is said or done in terms of improving the health of the banks? You've written about it extensively, Akash. Do you think that so far things have been pretty much on course? Because the timeline, as many believe, is too short for a system as well entrenched and as deep as the current banking system is to clean up itself.
First of all, I think what the governor, the Reserve Bank and the government have done to acknowledge the problem and to force the banks to recognize is a very positive step. It's finally some government has taken the bull by the horn, so to speak, and done that. I think there are two parts to the banking problem. One is they need to be recapped. So we see from the budget, the amount the government has outlined, the 70,000 crores, is not going to be enough, clearly. So there has to be some innovative way of getting money into the banks, whether it be through this, the economic survey talks about the RBI putting in money or SUTI stake sell down, whatever. So that's one part of it. And the second, I think they have to do more experiments like Bank of Baroda of getting in an independent chairman, independent CEO, people who have credibility, and change the governance and management framework of these banks.
Is that your opinion too, sir?
So we have to worry also about what they will do rather than what they should do. As of today, for the budget, I think that we are looking at that they should at least put in $5 to $6 billion, 30 to 40,000 crores. And then money is fungible. They can separately talk about SUTI shares being put into this or SUTI shares going somewhere else. But broadly speaking, it is not any more time for just stories at what we will do next. They must put in some money and then accompany that with why it is not going to be the same as before, that this is money gone.
But the current quarter was fairly brutal for PSU banks. They're already undervalued, but some of the private banks also reported asset quality concerns. Now, I'll come back to that point because the timeline has been laid till March 2017. Many believe that till the credit cycle picks up, credit growth is at 11% versus 18-19% of what it was at in FY12. Till that cycle picks up, isn't recapitalizing the banks, putting in more good money behind bad?
Yeah, I think 2 points, which is why I think the point of you have to change the governance and management framework for the PSU banks, right? That's why I think the Bank of Baroda example is important, because when they announced their earnings, they had a horrible earnings, big write-down. The stock was up 25% because they said, this is it. We've cleaned up, we're done, and people are allowed to look, we're looking at the, beyond this. So I think changing governance framework is critical. And, and I think the right time to do the cleanup is now, because there is limited credit demand.
From Singapore to Mumbai, it's all about LTCGs, isn't it? That's the biggest fear.
And Asha, in the month of Feb so far, we are one of the worst performing market in the world. Only one market which is falling more than us in this month is actually Greece. And yet markets, I think, are still nervous about implementation of long term. And it's not that markets are expecting, or government is expecting anything windfall. Markets may not like the government messaging because that may be a change in tax regime. And I think that is what markets are not mentally prepared for. It's not about the outgo, it's about the messaging which markets are nervous about.
Okay, let's get you another take then on that note. Let's also get you some expectations from India Inc. Here are the biggest names from corporate India putting out their wish list for Mr. Finance Minister.
It's the most difficult thing for the Prime Minister and the Finance Minister to really balance out the multiple needs of our society. So we are waiting for them because they are much closer. I'm sure what they will do will be the best for our economy.
I think it's important that the government makes a very serious thrust on high quality infrastructure. So I'm sure it's always a balancing act between maintaining the fisc and spending on infrastructure. But I think that is a very important push required in terms of setting in place a virtuous cycle for the whole economy. And one hopes that corporate tax rates will come down as well.
We are hoping that there will be some things on the SURFACE Act which will make it easier to resolve loans and maybe quicker to do it. Obviously, everybody is expecting some numbers towards capitalization, raising the exemption towards interest, tax deducted at source interest, especially for the senior citizens.
only budget that tax formation that is very important for the industry. Government concerned that development industry in India that very friendly. I expecting that industry friendly policy will be established in the budget.
So that really is the big question. Why budget 2016 like you have in the past? This is a budget like never before, and so you need to speed up with changing times, and which is why we're introducing the unprecedented ET Now budget wall for you right here on Budget 2016. Time is now. It's over to Neeraj Shah to take it away. And Neeraj, help our viewers understand, A, what are they going to get on your wall all day tomorrow, and what exactly are you going to be telling them right now?
Well, I'm going to be keeping the details of what comes out on the wall a bit of a suspense, Supriya, best revealed tomorrow, quite frankly. But yeah, just to give you a flavor of what this wall will have. So we'll have the heat map. Now what this will do is essentially give the viewers a flavor of how the market is going to be moving around, whether the green is dominating or the red is dominating, which are the stocks which are hot, which are the stocks which are not. Added to that, we'll give you a flavor of the volatility. Remember, the last 6 or 7 years, while the post-budget day or the pre-budget day, we may not have had exaggerated moves, but on the budget day, the volatility has been extremely high at certain times. So the volatility indicator will give our viewers a flavor of what's the kind of movement that could come into the markets. We'll have experts right here with me at the wall as well, telling you as live action is happening. We'll give you a sense of the option tracker as well, which will give you complete idea of where are the put and the call options positions being built, right from 6,700 to 7,300, which many believe is the range for the markets on the budget day. So viewers will have a complete idea at one go about what is it that the market is betting on with regards to the market moves on that day. And of course, we will open the market, we'll close the market on this very, very dynamic video wall right behind me. So yes, as much as it is information and editorial intelligence that comes in, we'll also be bringing a bit of flavor to the market coverage on budget day.
All right, plenty of flavor that is going to be coming out of the market coverage is the word from Neeraj Shah. This is unprecedented. No Indian television channel has ever done something like this before. You cannot afford to miss that budget wall at any cost. You've got to stay tuned with us to cover the budget and to listen to the budget or understand the budget like only we will do for you tomorrow. But let's get to the biggest market voices who've been with ET Now all through this week with their big expectations from Finance Minister Jaitley.
I expect it to be a good budget, one that will promote economic growth, and also I think there will be some incentives for investors to invest in equities and equity mutual funds is my expectation.
The headline fiscal consolidation that the government has indicated. The second is in details of how and when the pay commission will be implemented, and thirdly, what the government is doing to stimulate the housing market, because that's one area where any possible tax benefits can actually more than pay for themselves given the kind of growth they can generate.
There's a lot of uncertainty regarding the budget. The Vodafone tax bill having reared its ugly head again. That's not going to help sort of future FDI flows. The budget is talking about maybe 3 years capital gains exemption. I think people in the share market have forgotten how to keep records of purchases and sales. These are all sort of things that are going to make the market slow.
Well, he has presented 10 budgets, and so his expectation from the union budget, Nikunj, certainly matters. Yes. Less than just 24 hours before Finance Minister Arun Jaitley presents the big one, the Union Budget 2016, P. Chidambaram asserts that meeting the fiscal deficit target is non-negotiable because the world is watching that number with a very keen eye. In an exclusive conversation with Supriya Srinath, the former finance minister says he disagrees with how RBI is tackling the NPA mess, and it should be done over a period of just 2 to 3 years. Here's an excerpt.
I would be looking for very important signals from the budget. The first thing I look for is, have they stuck to the fiscal deficit target they set for themselves? More than that, have they set a lower target for next year? Not only Moody, not only the rating agencies, not only investors, The whole world will be focused on that, and if somebody believes that that's just a number, I think he or she is being naive.
First point that you raised was fiscal deficit, and just to be the devil's advocate once again, they say there are liabilities. First it's OROP, and then of course the 7th pay packet recommendations, so that's one part of why there are liabilities.
I've been in governments and implementing at least 3 pay commission reports.
I will come to that in just a bit. And the second part they say is that we want to increase investment in infrastructure. We want the public sector to be the engine of investment right now, and which is why, if at all they do expand the deficit, it will be on account of these two. So one is of course the liability portion, and other is the investment. Can we afford to let the deficit expand? According to you, no. But given the two scenarios, how would you refute both? And why would you refute both?
I'm quite clear in my mind. You have to stick to the fiscal deficit, period. Sticking to the fiscal deficit, you'll have to find ways to raise tax revenues and non-tax revenues, and to tap into the savings of foreign countries, which is investment into India. The answer is not to borrow more. You cannot borrow and spend your way out of problems. Remember, we tried that in 2009, 10, 11, and we paid a price.
5 years, yes.
We paid a price. You'll have to make a distinction between the willful defaulter and the victim of a downturn.
So let's just first talk about the victims of a downturn. How should the government hold their hands? By increasing bank recapitalization? Isn't that putting good money behind bad money?
Bank recapitalization is inevitable. Our banks are undercapitalized, and if they have to grow their book, you have to put in capital, because there is a capital adequacy ratio prescribed by Basel norms.
Why can we not take leave from those Basel norms? US took that liberty.
No,
Why
you can't take leave, because your credibility of your banking system will fall in the eyes of international bankers. Nobody will open a letter of credit or honor your letter of credit.
So is the solution then that you keep putting stake for recapitalization? You keep pumping in that money, which may or may not yield results, because the economy may or may not turn around.
You seem to think recapitalization is bad. No. Our banks require more and more capital to grow their book. If you have to lend more, you have to have more capital. And capital can only come out of 2 ways. Either you redeploy or reinvest profits, or you bring in more equity.
You know, frankly, it's really about, from a government standpoint, all about how can they revive the growth back. From a market standpoint, it is all about how will EPS move up, and from an investor standpoint, it's taxation. So clearly, there are 3 headlines which everybody is monitoring. There's a lot of confusion, a lot of chaos. The backdrop is painful, and like I said, India is the worst performing market in the month of Feb. So sometimes
Mr. Chidambaram agrees that the timing may not be right. I heard Supriya's entire interview with him, and he was extremely vocal in saying, right, Supriya, that this may not be the best time to actually tax the markets and make them pay for an otherwise, in any case, weak and plunging market, and bring about the long-term capital gains tax.
Especially at a time when sentiment is so weak and so tattered, I don't think anybody would have the political courage to go ahead and weaken markets further. You may want good money to stay in, you may want long-term investors to be here, but I think at a time when markets are seeing the kind of fall that they are, I don't think anybody will have the political appetite. So I don't think Mr. Jaitley will have the political courage, so to say, to go ahead and tweak anything with markets. But talking about political courage and talking about political appetite, time to get you the best economic voices taking the government head-on for clear answers as far as the promises that were made and the delivery that has been on the ground. We get you a network exclusive with Arnab Goswami and Sandeep Gurumurthy.
Promise versus delivery. What was promised versus what has been delivered. Omkar Goswami, why don't you start, please?
Well, at one level, you can say it was a little bit of an over-promising. But having said that, and all over-promising often leads to under-delivery, but having said that, I'm going to just focus on 2 things which are pretty good for course. Whether you quibble about the GDP in numbers or not, the fact is that we are today at about 7% growth, give and take, a few points here and there. That's a very, very reasonable growth, because there is no other country that is of any size that has that growth rate we are growing actually faster than China. So that growth is much better than before. Of course, we want more growth, but that growth is, I would say, in a very, very difficult world circumstances, in the world economic circumstances, a good delivery. Where I really do worry about, and Arnab, this needs to be debated, one is the fact that about 13 to 14 million people, minimum 12, young people are going to join the workforce every year. Minimum 12 million, more like 14 million. One quarter of them are not properly equipped, not properly literate. And I don't see any impetus in employment taking place in the economy. If anything, people are moving away from employing people to employing more capital, more machinery, and use lesser people per unit of output produced. That's a big worry that we should think about. And the second worry that we should think about is somehow manufacturing is not growing. It is just not growing. Manufacturing is quite employment intensive, especially in small manufacturing, and that just isn't taking off.
So let's come to jobs. Is the organized sector the critical sector that provides all the jobs in India? No. The unorganized sector, small and marginal self-employed, is a huge sector of employability and employment. Now, one research I was checking seems to indicate that probably in the organized sector, the total number of jobs is plus or minus, something like about 14 or 15 million, as compared to what we talk about, say, maybe 4 crores or 5 crores in the unorganized sector or in the small. So you have a Mudra Bank issue where you've got about 1 lakh crores being distributed to small and marginal people who have very...
Naren, you've conveniently not answered the question that Arnab asked and that Rajiv Kumar asked as well, which is why is the government not using
I can't answer 4-4. Please remind me. Tell me.
Please answer that question. Why is the government not putting its 281 seats to use? Why is the government not using its political capital? Why is it not taking the bold decision that all our panelists expect this government to take?
Why aren't you?
I'll tell you why. Because there are some there are bold measures. But yes, I mean, as I said it, we spoke a short while ago. I think it was probably Mr. Rashesh Shah who said, it's not easy to think about ensuring financial inclusion for 200 million people. It was bold, it was fast. We are talking about infrastructure. We understand the NPAs. You are saying about accounting of the government.
Okay.
Was there ever even a movement towards looking at the actual problem of NPAs, how deep it is, and how much is the problem?
All right, that has to be the most fiery debate as far as Budget 2016 is concerned, and you've got to watch it right here on ET now. But Nikunj and Aisha, over to you guys, because we just want to understand the whole Modi premium that one did see in Indian markets after May of 2014 has really been wiped off. I mean, we are all talking about losses today. We're talking about the global gloom. What is it that the budget can do, and what is it that the markets would want to hear from the budget to perhaps get back on their feet? I mean, this is a knee-jerk reaction is what Finance Ministry Babus have been telling you for a long while now. But can Budget 2016 fix this at all? And that's really the big question. What are the things, according to you, that markets would want to hear from the budget, and something that they would certainly not want to?
Well, earnings revival, I guess, Nikunj. That is the reason that we have faltered, besides the knee-jerk reaction that we faced thanks to China, Brexit, US Fed. But besides that, it all boils down to earnings. If earnings were standing tall, there was no reason the ICICI banks or the SBIs of the world would have fallen the way they have, or the market would be back to pre-Modi days.
Well, markets are back to pre-Modi levels. Earnings are also back to pre-Modi levels. In last 4 years, virtually, we've not seen any earnings. So from a medium-term investor, what ultimately matters is that what this budget can do to really kindle growth. That's where I think the big debate is. It's not about a tax. It's not about a fiscal deficit number. No one is a school kid that they would punish the finance minister for missing on the fiscal deficit target. So that's noise. That's going to be discussed, and that would be adjusted tomorrow by end of the week. But ultimately, it's the direction. Ultimately, from a market standpoint, it's the tax regime. It's the messaging which matters. Banks is where I think they'll have to come up with something big bang, not just a number on recapitalization. They'll have to do something really on the rural economy that markets are prepared for. But ultimately, it boils down to a stable tax regime, what will happen to the Sensex EPS, and which sectors in the short term will benefit. There are two sides to the economy, investment and consumption. Investment, they're trying to revive by government expenditure. Consumption is where the trick could be. So something on the consumption side, more like a tax cut for the housing sector, something on the, on the government over our peer side. So these are factors which really matter now.
Oh yeah, it does. And just that there are two sides to investment. Neeraj, there are going to be two sides to the market as well. Yes, tomorrow. A, investment, and B, trading. Just walk us through what is the expectation out there on the street, because budget days are famous for the volatility that they bring in.
They do. But yeah, just to corroborate Nikunj's point, that keep in mind that a large portion of our index earnings don't come by virtue of what the domestic earnings are. The global earnings play a big part as well, because of so many index companies have the global exposure and revenues coming in from that side. So I don't know how much the budget can do to revive earnings per se, but that's just my view. But yes, you hit the nail on the head, volatility, Aisha, and that is a very crucial factor as well. Keep in mind, the last 15 years, I'm just taking 15 years as a sample, there have been periods wherein the volatility, the intraday budget moves, I'm just rephrasing myself, have been as high as 9%, at times have been as lackluster as 1.2%. So the key question that will be to the mind is, only for that day, which is tomorrow, what will be that key factor that could lead to volatility going up? And it probably has to be any kind of mention on the tax front. The market is just so prepared now for that dreaded capital gains tax, as we've been talking about every day on the market, the morning show, that if it doesn't come in, maybe it's a positive, but if it does come in, maybe there could be a bit of a negative as well. And that's when actually I want to pick brains of all of you. We all know that if the capital gains tax does come about, it will be volatile and there could be a downside. But Nikunj, Aisha, Supriya, any of you, what if it doesn't come? Because the market does believe that there could be some tinkering there. What if it doesn't come?
Short covering led rally, a big bout, right all the way to 7,200. Right, Nikunj?
See, we've been beaten down black and blue. Markets are nervous. The setting is nervous. Everyone is anxious. Bears are on, everyone is on the same side of the boat, and typically when that happens, that really means that any kind of a relief will have a multiplied reaction. So will the multiplied reaction translate into a 5% rally on the Nifty, 3% rally on the Nifty, 2% rally on the Nifty? I don't know. But if we don't get long-term tax tomorrow, there will be a rally, and there will be a big rally, and perhaps the smartest and the best rally for the season.
Oh yeah, definitely. Given the amount of shorts that are in the system, you're definitely bound to see a short squeeze, and we will see a relief rally for sure. Neeraj, to answer your question, but a day after presenting the economic survey, Chief Economic Advisor Arvind Subramaniam says that the government
I wanted to come in, guys, just listen to me when I'm trying to...
It's fiscal target. Speaking exclusively with ETNA's consulting editor Swaminathan Iyer and chief editor Supriya Srinath, the CEA also says that he is optimistic of achieving the GDP growth in the range of 7.5% for FY17.
Well, I think that what we're saying in the survey is that the next year is going to be, this coming year, the international environment is looking pretty grim. Right? I think, as I said, never before in the 20 years that I've been following the global economy do I see such a coming together of so many vulnerabilities all over the globe, and so I really do worry that there is growth is slowing down. There could even be quote-unquote extreme events, and so I think the point is that therefore India's performance has to be seen against this international context, because we're becoming very integrated with the world. There's a chart which shows, the correlation between Indian growth and international growth is now high and rising. So part of becoming so entwined is, you get benefit from the upside, but you also, sink on the low side. So I think that recalibration of expectations is something I think is very important.
I'm trying to understand. Both the WEO of the IMF and the JEP of the World Bank predicted India at about 7.5, 7.6 for the current year. You are doing the same. And they did this, they came out with their projections before this huge slump that we saw globally in January and February. They then said that this is our scenario and there is a chance of a good 1/3 fall if things go basically wrong. So would you then agree that if 7.5% is a good case scenario, if things go wrong, that might fall by 10, 20, 30%.
So Swami, in fact, the reason for the range, the 7 at the lower end and the 7 3/4 at the upper end, is exactly for that reason. I.e., supposing this year is 7.6, the fact that we say put the bottom end at 7 is in fact to allow for extreme events in the world economy.
Suppose China devalues 10%. Must all of us devalue by 10%?
I mean, see, firstly, we have a market-determined exchange rate, so I don't know what's going to happen in that scenario. It's possible that if there's a capital outflow that may come about naturally, if not, we may react in some ways, but it's something that we have to take very seriously for two reasons. One, there's an aggregate growth slowdown, right? The second is that there are sectoral consequences, right? I mean, so much excess capacity in some sectors, and those sectors in India are hurting badly, steel, aluminium, metal, so on. So that's, I think, it's a combination of sector-specific shocks and generalized shocks that we have to be very careful about.
You have a discussion on fiscal deficits, on what are the pros and cons of slowing down your path of fiscal consolidation. On the one hand, you say that, okay, fiscal consolidation, I must remain on this path. But why should I walk at this speed? Why can't I walk more slowly? I mean, that basically is the argument. How often are you doing this? If you postpone a target twice in 3 years, does this sound like a country that is serious about consolidation? At a time when global guys are getting so jittery that they are looking for any excuse to pull out. And you really have to give them very, very hard reasons not to pull out.
Yeah, so I think, Swami, you're forcefully making one side of the argument of this debate. And I think that, firstly, I mean, we've had a very lively internal debate on this, and the government has been fantastic in actually encouraging this debate. It's been very animated on both sides, because I think, frankly, there are good arguments on both sides. But remember, I think the credibility argument is slightly overdone in terms of promises, because I think you get credibility by doing things. But the arguments on the other side are the following, that what is the magnitude of the consolidation that we require to get, in fact, credibly to 3.5, especially when you have all these obligations. The second thing is that, the point that you made earlier, if in fact there's a massive slowdown, then do you want to compound that slowdown with this aggressive consolidation? And so the credibility argument that you make is very well taken, but there are also arguments on the other side, and I think it's just a matter of how you assess these things.
All right. Arvind Subramanian has ruffled quite a few feathers after his economic survey. He's not just making case for fiscal expansion, but he's also put in some very controversial things like taxing farm income and making farmers pay market-related urea prices. I don't think Finance Minister Jaitley or some more finance ministers yet to come in some years now will have the political appetite and will to do that. But I think the challenge before Finance Minister Jaitley tomorrow will definitely have to be, should he weigh on the side of keeping his fiscal credibility intact? That's a promise he had made. He is going to achieve 3.5% next year. Is he going to do that? Or will he actually throw weight behind what Arvind Subramanian has been pointing out to? Loosen purse strings, invest more, let growth take a chance over everything else, because a rising tide lifts all boats. That's the argument. That's one side of the argument in North Block. And the other side of the argument, and every hawk is watching it with very, very bated breath, is will he relent on 3.5% for next year? 3.9% is achievable. I think the other big thing that people will be very interested in, I'm sure markets are keeping a very close eye also on, Aisha, Nikunj and Neeraj, is what will he do with the rural economy? You speak to anybody who's a stakeholder there, corporates who've got exposure, they believe it's a very acute distress situation. Is he going to revive the rural economy by talking about stimulus there? What is he really going to do with enabling environment as far as job creation is concerned? This government came to power on the development plank. 20 months into the government, there are no jobs. When will the jobs come on board? I think that's going to be his other big challenge. Other than the fact, of course, that he have to pump in a lot more money into PSU banks, boost their balance sheets, boost credit offtake, because when the economy does revive, PSU banks will be out at the front to lend. So how is he going to do all of that at the same time maintaining liabilities like an OROP or the 7th pay panel? My own suggestion on this is that this is a little too exaggerated, because the finance ministers in the past have also executed All right, live visuals on your screen right now, and Finance Minister Jaitley along with Minister of State for Finance Jayant Sinha are sitting with their entire team here. These are the architects of Budget 2016 really. You have the 5 secretaries from the Department of Finance on your screens right now. So this is really the move that happens every year when Finance Minister along with his entire team, this is what they call photo op for every practical purposes. You do have Arun Jaitley, the Finance Minister there. You also have Jayant Sinha, Minister of State for Finance. Arvind Subramanian was also there, right there at the back, the tall man there. You've also got Ratan Watal, Finance Secretary there. He's also Secretary Expenditure. Shaktikanta Das, the Department of Economic Affairs Secretary, the department that really puts the budget together, is on your screens as well. Hasmukh Adhia, the man who made the switch from banking to revenue rather briskly. You also have Anjali Chibdugar. She is the secretary in the banking department. That's what's called the Department of Financial Services. And you've got Neeraj Gupta. All right, shaky cameras there, excuses for that. But guess what? This is happening just hours before the budget. And we're getting you live visuals all the way from North Block. You also have Neeraj Gupta, the newly appointed divestment secretary, on your screens there. If I'm not wrong, the document before Arun Jaitley is really his budget speech. I've been given to understand he began reading that speech, began reading the first draft of this on Thursday. So between Thursday then to now, he must have gone through this multiple times. I do know for a fact that finance ministers often tweak the blue sheet. Blue sheet is where the numbers for the budget really are. They often are known to tweak that blue sheet till the very last moment. This is at their discretion. Everything else that they say in the speech really goes on as a part of the budget and is printed well in advance. And because of being environment friendly this time, both the economic survey and the budget, the copies that will be printed have been considerably reduced. But live visuals on your screens, and if you can get them back for you, you really have the architects of the Union Budget 2016. That one document alone, Nikunj, Aisha and Neeraj, is going to change the fate of over 1 billion Indians and every stakeholder in Indian economy who's really watching this, whether he's in India or overseas. But that one document alone is going to decide a lot of things come tomorrow morning. Nikunj and Aisha, what is it that the markets, again, I'm going to go back to the question, would want to see in the document that was lying right before Finance Minister Jaitley as he sat for that photo?
No tampering with taxation, Supriya. I think that is the key word that the markets are going to look out for. Up until he comes to defense allocation, I think the markets would have laid their bets on whether or not the long-term capital gains tax is coming or not, or whether there's any tampering with STT. What is he going to do on taxation? I mean, it's never been a budget where we've talked about taxation so much from a market perspective, but this time it is.
Well, the other number, apart from the long-term capital tax, markets would be also curious to get an understanding of what will happen to the corporate tax structure, because he's talked about in roadmap, he's likely to give the roadmap and he's likely to share a number. So service tax in all probability markets are prepared will go up. Markets also want to understand the roadmap on corporate tax. Markets are prepared that the allocation to the irrigation sector, to the road sector, to the entire agrarian sector will go up. I got a very interesting take from one of our market panelists yesterday evening off the record when I was talking to him. He said, you know, whereas we tend to relate everything to stock markets and bond markets, but remember, there is a political compulsion which also is riding this budget. And this time around, government is also cognizant of the state elections which are coming soon. So maybe there would be a political element to this time's budget as well.
Maybe a populist tone. In fact, we also caught up with Neeraj and I, caught up with Ramdev Agarwal as well as Manish Sukhani of Enam Holdings on their expectations from the budget and what market really wants. While Ramdev is all eyes only for any tampering with the dividend taxation or long-term capital gains tax, Manish Sukhani believes that come the next day, that's the 1st of March, it's going to be all about the global cues once again.
The funny way to think of it is there are a lot of rich uncles and aunties in the world who are in, you know, major trouble. And our doctor is going to come and visit us. And you can only hope he doesn't give us a dose of stiff medicine that day. But other than that, you're going to still keep looking, you know, come 1st March, you're going to look what's going to happen rest of the world, will the flows come? Because eventually markets run on weight of earnings. And that earnings are going to be, you know, in a funk because of what's happening in the rest of the world, at least externally. And you really run on sentiment and you run on liquidity. There is no liquidity. And sentiment isn't going to turn on a dime irrespective of what we do in the budget. So
and there is no
it's a tough space. Yeah.
So just another day, it's not going to be anything market.
Yeah, great television.
Certainly. No, but you know, Ramdev, is this budget more about, and before we get to specifics, is this budget more about what the markets don't want as opposed to what markets want?
No, that's very small portion of the budgetary exercise. I mean, though since we are in financial markets, probably we might be very keenly looking for that one line where the capital gains tax is 1 or 3 years or something like that. But I think the larger thing is that what kind of vision the finance minister of this government has about kick-starting the investment in this economy. You know, I mean, all kinds of constraints are there. Fiscal economy is not growing, so revenue is not growing. There is no tax buoyancy. There is a constraint on the fiscal deficit you can have. You have a very watchful central banker, rating agencies. So in that situation, how do you wriggle out? And yet you have to kick-start, and nothing can kick-start unless you put a few $100 billion. And that's where the imagination of this finance minister and how he carves out from a very small 1 acre plot, how does he make a 100-story skyscraper?
But, I was, sorry, just an extension. We would typically never start a pre-budget discussion with a tax question, but the market is just so spooked about whether long-term capital gains tax is going to come or not. What could be the thinking behind? Whether it comes or not, we'll find out on the 29th. What could be the thinking behind it? And could that really derail an already grappling market?
No, I mean, pre-budget you can keep asking some crazy things and, keep imagining crazy things. I think the best thing, because we don't understand how Delhi works. I mean, at least I don't understand how Delhi works. Whether it is rational or irrational, that also I cannot say. Markets are definitely irrational in the short term. Okay, so two irrationality is like irrationality squared up. So let's be cool, watch the budget till end and see, you have to look at the total package. If I wish they abolish the dividend tax altogether. Double tax and dividend has to be abolished. If you really want equity markets to fire up. Fire up means, see, you are in a FI trap. This market is in the trap of FI.
Sure.
You have handed over disproportionate portion of the market in their hands. 20% of the equity and 40% of the floating stock. Now, so they determine the trends, and they're not dependent. Their allocation is not dependent on what happens in India. Their bulk of the allocation is depending on their view of the world, which at times doesn't look that bright, and hence, you see last 3 years you got a lot of money without asking for it. You didn't deserve to get anything. You got $100 billion. So it will go when you deserve.
Well, hope
so how do you create a counterforce? And these are thoughts I would like to see in the budget, at least thinking, if not action.
Okay, so that's one point that is out. The other thing, and I think a lot of focus is there on that number, the fiscal deficit number. And Manish, the question really is that whether the trade-off, everybody knows the trade-off. The question is whether he goes ahead and sticks to the given target, because it's also a question to a lot of people about credibility of what they've said and whether they stick to it, or they actually just loosen the springs a little bit because they need to bring in that much desired consumption growth.
So, think of our government as a, indebted company. And therefore there was an EPS forecast put out. And now question is, do I miss the EPS forecast by 5%
like I'm in a classroom.
or do I miss it by 20%?
That's a disclaimer.
And in what manner is the miss coming? Because if you look at the way a rating agency or the bond markets or currency markets will look at this, they'll say, you guys got a windfall from oil this year. It's not like there is not a crisis in India every other year, and therefore there's every other year an excuse to let fiscal targets slip. But reality is when you look at consolidated fiscal along with state and center governments and public sector, we're already at a 6-7% of GDP number. So it's because you'll put the Uday Commission burden on the states, and the bond markets have reacted to that already. Then you will also put the one rank, one pension. You will also put the 7th pay commission burden on it. So the revenue expenditures are going a bit crazy. And reality of life is the central government accounts for 1% of GDP in terms of capital expenditure.
Well, Supriya, I guess it's all out there. Well, Ramdev Agarwal has put up his hands and said he doesn't understand how North Block works. I think Manish Chakhani really spelt it out. From the FII watchtower, it's extremely critical considering we guys have growth and better than rest of the world. We've had oil on our side. We better not goof it up. It's extremely critical, this budget, isn't it?
Oh, absolutely. And for many more reasons, Aisha, it's not just because, this is a make or break budget and there's no reason why we're saying that. It's simply because this is Modi government's third budget for all practical purpose. The first budget was presented in the first 40 days of the government, so you can forgive whatever the government did there. The second budget was presented after Finance Minister Jaitley had spent a considerable amount of time in North Block, and now he spent 20-odd months. So there is a lot of hope, there is a lot of realism that's now riding in and onto that hope, and which is why markets also understand that 2017 or the 2018 budget are going to be political budgets, because there will be elections. I mean, later on this year, there'll be West Bengal, Tamil Nadu. I mean, that's how elections will start. Punjab, the mother of all electoral battles, we will have Uttar Pradesh coming up next. So when the government gets into poll mode, the budget expectations are very tempered. They are very tempered, if I may say, simply because then there will be more populist decisions that will be made. And this government will not perhaps make the mistake of India shining. They know, and if I understand what happens in New Delhi, a little more than Ramdev would grant us for, is that in its tenor, in its presentation, in everything, this budget will be rural focused. They've seen two big electoral losses. They cannot afford to make that mistake. My colleague Ruchi Bhatia is joining us all the way from right outside North Block. That's where the entire budget preparation is happening, and that's where this photo op also was. And she's joining us with the expectation that's building up. Ruchi, you've been speaking to people time and again, also this budget making exercise. What could be the key focus areas for Finance Minister Jaitley?
Supriya, what we are given to understand is that in this budget, which is going to be Arun Jaitley's third budget and his second full year budget, what we are given to understand is the big focus will be on how he will go ahead and balance between growth as well as fiscal deficit. Remember, even in the economic survey, the government has gone ahead and said that the oil price rise as well as a global turmoil can pose as a serious downward risk to the growth in the economy. And at best, what we can do is see growth between 7 to 7.75% in FY17, and at a time when they're talking about creating jobs and crowding in private investment, perhaps it is time for Jaitley to balance between growth and fiscal deficit, and also at a time when rating agencies like Moody's have clearly gone ahead and said that India is fiscally weaker than most of its peers. It is going to be a tightrope walk between sticking to the 3.5% fiscal deficit target or really going ahead and breaching it and get in more private spending. What we're also given to understand is that the second big focus in this budget will be on rural economy. Remember, we've seen 2 consecutive years of drought. At this point of time, many say perhaps it is the right time for Arun Jaitley and his team to go ahead and increase allocation for rural spending. Will he really go ahead and do that? Thirdly, we're given to understand that PSU bank recapitalization very recently, in fact, the parliamentary panel has wrapped not only the RBI but even the government on the high level of NPAs that we've seen for the banking sector. And if the banking sector really needs to push the economy at this point of time, remember, there is a need to recap the PSU banks. They have to meet the Basel III requirements, for which they need 2.4 lakh crore rupees. What we're given to understand is that some sort of an announcement for PSU recapitalization would be the big focus area that everybody will be watching out for. Apart from that, simplification of taxes is something that both Jaitley as well as Prime Minister Modi have spoken about several times. They're talking about a roadmap for phasing out corporate tax exemptions. Apart from that, how to align service tax with GST will be something that will be watched out for. And lastly, subsidy rationalization. They've already said that DBT will come in, and that is going to be something that will help the government in terms of subsidy rationalization. And even the economic survey pointed out that in terms of subsidies, we're giving close to 1 lakh crore rupees in terms of subsidies to the rich people. So how the government will really go ahead, rationalize subsidies, will be all the key focus areas that we will watch out for this budget.
All right, Ruchi Bhatia, thank you very much for being at the heart of all policy making. As the budget document is being given a photo op, finally, we're the only channel live right now with those visuals from North Block. We're the only ones giving you a sneak peek into what you need to stay tuned for tomorrow. So, Nikunj, Aisha, it's an exciting time to be in that newsroom. And Neeraj, you're going to spend your time worth its while as far as that ET Now budget wall is concerned, a first for any Indian television channel. We're going to get you unprecedented data, unprecedented intelligence there.
Yeah. So, sorry, Aisha, you were mentioning a wow wall, is it?
It's a wow wall. It's not a budget wall. It's a wow budget wall, Neeraj.
So,
burning the midnight oil right here, the only channel on Sunday, live to give you a sneak peek of what tomorrow is going to be like.
Yeah.
You know, for me, this is the budget wow moment, the wow wall.
No, so as much as it will look like wow, it will also give you some very interesting data and points as well. So keep that in mind. You know, the other thing, and of course, as I said, we're not going to reveal anything. Let this be suspense for tomorrow. We start at 7 a.m. tomorrow, and you will get a sense of what the wall as well as this amazing set that we've created does for you. Sorry, Supriya, you want to comment?
No, absolutely. And, you know, you really got to stay tuned with us at 7 a.m. Tomorrow morning. 3,000 man-hour groundwork has got into bringing to you what we will beginning tomorrow morning. So you cannot afford to be anywhere else. You've got to stay with us simply because we've changed the rules of the game over and over again. It's time we've decided we need to change how budget is covered in this country. This budget is for the new India, and you've got to keep pace with the changing times. You've just got to be on ET now because this is Budget 2016. Time is now. It's a big thank you that's coming in from the entire team together that's put the show and everything else that you're going to watch for the budget. Thanks very much for being with us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.